China's grip on energy transition tightened this week with the Hong Kong listing of a small battery-making business controlled by Tsingshan Holding Group, a company which has already run rings around the best in the West. On its own, REPT Battero Energy is a modest player in the fast-growing business of making batteries for electric vehicles, reported to rank 10th in the pecking order of Chinese EV battery manufacturers. But Tsingshan, the major shareholder in Battero, has a well-earned reputation for technical innovation in steel and nickel, an important ingredient in stainless steel. Over the last 6 years, Tsingshan technology has revolutionized the nickel industry, with that success a possible guide to what's planned for Battero, which raised a modest $272 million from its Hong Kong listing earlier this week. Tsingshan's founder Xiang Guangda is a man known to not do things by halves. As well as building a steel and nickel business, he hit the headlines for the wrong reason last year when reportedly losing $1 billion on a bet placed with traders on the London Metal Exchange that nickel price would fall, only to see it soar when Russia invaded Ukraine. Xiang's bad bet caused a crisis at the Hong Kong-controlled LME, which is still making its way through the legal process and ongoing appeals. Finding a way to make battery-grade nickel from low-grade ore has seen Tsingshan emerge as the dominant force in a metal which the world's biggest mining companies, including BHP, Glencore and Anglo American, see as important to their futures. But nickel from Indonesian mines and smelters controlled by Tsingshan has been a major factor in crashing the price of the metal traditionally used in the production of stainless steel, but with a growing market in the complex chemistry of batteries. Not only has Tsingshan been able to master a nickel extraction technology called high-pressure, acid-leach, HPAL, but it has built projects in Indonesia at a fraction of the cost of rivals and in months rather than years. The first Tsingshan plant in Indonesia, built in less than 12 months at a cost of $700 million in 2018, shocked Western rivals, which had invested up to $6 billion on similar plants and still struggled to profitably produce nickel. Mackenzie, a resources sector consultancy, estimates that Tsingshan's average capital intensity at its Indonesian smelters is around $35,000 per ton of nickel, compared with an average closer to $100,000 per t for Western-built plants. The net effect is that Tsingshan is driving down the price of nickel and driving out high-cost rivals. Over the last 12 months, nickel has fallen by 40% to $16,913 a ton. Early last year, when Xiang was caught short with his nickel bets, the price rose beyond $45,000 per t.